Good morning, Fractal Effects team. We're still following the market from the morning session. So if you're joining us, please make sure you read the disclosure section on the the disclosure in the footer section of fractaleffects.com. If you're following along, make sure you're doing a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. So we're going to jump right into it. We're heading right to, I'm just going to be blunt, we're heading right into the DSD high, the NWOG, and on US 500, we're going right to Asia highs, right there, that yellow line and that that box right there. Remember, when you're using divergence, you will find the exact same. So you'll find zones. They might not be the exact same zones, but they're going to be lined up perfectly. So we have inside the range model and a contraction model, which means that the market usually wants to take out at least Asia highs, especially if you have a buy model. So we have a buy model and we have a triangle pattern here. Excuse me. So this is our first presented fair value gap that's being created right now. We have 3 minutes. We don't have it fully formed yet. But that's our goal right now. So after we had this double break, we had this drop right into London's first presented fair value gap. And then we had this immediate rebalance. Immediately I knew that this market wanted to go up because US 500 didn't even take that low, didn't even give us a triangle pattern, which means it's extremely bullish. The only thing is we didn't create a 5M fair value gap here. So we used a 1M right after this immediate rebalance, and then we took 50% consequence encroachment of this candle. As soon as we wicked it, we had another close over. Remember, expansion met with expansion means the market wants to go in that direction. And now we're just waiting for it to hit Asia highs and the DSD high here. We're already in a safe trade. We've already hit 2R and taken some off the table, rolled our stops. So even if it stops us out, that's fine. But that's our target right now. We had some orange folders today. .47 seconds left. I'd like for this fair value gap to stay open. Now keep in mind, this is also the NYC opening gap because of all this consolidation, it didn't leave a fair value gap, and this is actually the last candle to form our dealing range. So I could use this right here, just bounce right off of it and go right into this zone. But you see what I mean when I say divergence? It's not going to be the exact same zone, but it's going to be aligned. This is not a coincidence that the DSD high on NAS is aligned with Asia highs right there. The market translator paints all these areas out for us just so we visually can see, like, oh, that's where it's going to turn around, or that's where it wants to go into. And also, remember, when it comes to divergence, whichever one of these completes that action first, that's when you exit, regardless of which asset you're trading. If this one hits DSD high first, then you're out. If this one hits or takes Asia high at liquidity, then you're out. Still just gesticulating. I'm sure it's going to do one more drop. We're now at 10:30, so we should be getting a confirmation as well. Spotlight confirmation. We'll wait for that as well, just to finalize everything. Still waiting for that big push. So US 500 never created an NYC opening gap. So it could come back down, touch the 20 EMA, or use London's. Actually, I believe that's Asia's. Yeah, that red line coming through, red box, that's Asia's first presented fair value gap. Again, not a coincidence. It could use that, whereas this one could use this, so they could both tap right into something and then push up. That's how algorithms work. You're always going to be able to find similarities in diverging pairs. So it's bouncing off of this first presented fair value gap. That's our key zone that we're looking at. This is also, as mentioned before, the first fair value gap created after we had that break to the downside. We'll go down to the 1M. Getting that push now. Going to jump back up to the 5M. So still no 1M bullish fair value gap created. Digging in even deeper. There's a little 1M fair value gap in here as well. Right here. So US 500 still wants to tap this 20 EMA. Still no confirmation signal on either of these. So we're still following the blue zone strategy. So now NAS has touched this fair value gap down here as well on the 1M. Just zoom out here for a bit. Or we've already rolled our stops. Stops are down here. So even if the market comes back and sweeps it, we've already taken some off the table. We're aiming for this high right here, the DSD high. And on US 500, Asia highs. US 500 now back at that Asia first presented fair value gap. Let's see if we get that immediate rebalance or if it continues to push down here. Just want to see if US 500 hit the 20 EMA yet. Touch the 20 EMA. So US 500 has already given us what we call an early retracement. When we come back to the 20 before getting a confirmation, that means when it does eventually push, it could use if we get a bullish confirmation, it could use the first fair value gap that's created after it gets that confirmation to push off of. Looks like it wants to do a deeper retracement now. So it's violating this fair value gap. I want to see where this candle closes. So it could be doing one last sweep down here before pushing up. But let's see. Ideally, we'd like to see it just push up from here. Excuse me. Two minutes, 10 seconds left. I want to see where this candle closes. So we've already met London obligation. London obligation has been met. We've tapped that first presented fair value gap. Remember, London had a break down. First 5M fair value gap, tapped it, rode all the way up to take out the highs. Double break, break to the bottom, triangle pattern. We used the first fair value gap that's created. One wasn't created in here, but we had this immediate rebalance. That's a huge immediate rebalance. We used the 50% of that green candle. That's where we wicked. With the targets all the way up here. The DSD high, and on US 500, the target would have been Asia high. That's what we'd like to see happen. We're already in a safe trade. We've already rolled stops and taken some off the table. 53 seconds left. I want to see if this is an immediate rebalance. Remember, expansion met with expansion. That's what you want to see when you hit a fair value gap. I would have liked to seen a wick off of this, off the red, and then the green push all the way the other way. But I want to see if this is a fully engulfing candle. Same thing over here. Since US 500 never created a 5M full bullish gap, we're using London's first presented gap, this red one right here. Sorry, Asia's first presented gap. Targets remain the same. That's a beautiful looking candle. 2, 1. Let's see if we get a bullish confirmation off of this as well. Now on the 1M, let's see if we left any fair value gaps. Just here, one is forming. Oops, that's the old one. So one is forming in here, but we still got 32 seconds left. Let's see if it closes it completely. 15 seconds. If there's a sliver of a fair value gap that it left right there. Sometimes you gotta zoom in. Just gonna paint it out really quick, just so we know where it is. Just so we know we touched it. There you go. You touched it there. Now I want to see it close. We want the market, the next candles to close above here. That'll be a direct sign that this thing is ready to push up. I'm just going to stay on the 5M. So it's already violated this one. That was the only 1M bullish fair value gap that was created. So now I want to see another one created then. Unless this one immediately rebalances back into it. "25 seconds left. Expansion met with expansion." But let's see. It's still got to close up here and then continue up. If it closes down here, I'm going to consider this violated. I want to see another 1M bullish fair value gap created. 8 seconds, 7, 6, 5, 4, 3, 2, 1. So that's your immediate rebalance. So it's respecting this fair value gap, this sliver of a fair value gap. I want to see it still close above here. I want to see a candle body close above this line. Because this was the series of candles that started that push down. So you want to have a closure above the bodies here. "26 seconds left. I'm sure it's going to play around for a bit. Probably won't give us that close immediately. We'll see. Still just gesticulating. I want to see a close over this. And then that will be our targets up here. If it keeps sticking around like this for a while, it might actually drop lower, but we'll see. It's going to stay on the 5. 30 seconds, 29 seconds left on the 5. The only reason I keep dropping down is because it's more clear for me to see if a candle closes over here, whereas one candle on the 5M is a little harder to read sometimes. So this one clearly did not close over. Coming back to retest 50% of this immediate rebalance, the engulfing candle. If you're already in profit and you see a lot of consolidation happening, you might as well exit your position. I mean a lot of consolidation, where the market is letting you know this is going to be one of those days. Remember, this should be easy. At any point it gets hard or it gets annoying, exit, especially if you're in profit, especially if you've rolled your stops. You can do one of two things. You can exit and take even more off the table, or you can let it ride. But either way, I would just set the TP. You already have your stop loss at break even, just walk away. If it hits it, it hits it. If not, whatever, come back later. There's no point in watching all this consolidation. You're either all in or you're all out. I personally like to preserve my capital. Capital preservation is my first priority. It should be yours as well. So sometimes when I see too much consolidation and I'm still in profit even after taking money off the table, I'll just close out the position. This is fine. I'm not too bothered by this. I'm just giving you heads up. There are days where you will consolidate within a range the whole day. I've seen it. You've seen it, I'm sure. Also, this is not my favorite model. We have a contraction model as far as the spotlight strategy, and we have a inside the range model. They're essentially the same thing. What that means is London formed, I'm going to go back up to the 5. London formed inside of Asia. London formed inside of Asia. Usually contraction models, they like to sweep both sides of London at least. So you want to proceed with caution. I'd like to see it tap here if it wants to take London lows. We do have a buy model. Usually buy models, we want to finish them all the way into the DSD high. The only reason I'm aiming for the DSD high today, as mentioned before, we aim for the low-hanging fruit. In this scenario on US 500, the low-hanging fruit is Asia. Asia highs is the low-hanging fruit, which just happens to line up with the DSD high for NAS. NAS is the more interesting pair for me, just because we have that triangle model. Question is, how long is it going to sit here? Usually consolidation leads to a continuation after a manipulation. So if you haven't hit your targets and you see consolidation happening, prepare for yourself for a possible manipulation. There doesn't have to be one. The higher probability is that it will continue in the direction that it was already going. Remember, if you're doing this right, it should feel like you're watching paint dry. Otherwise, you're sitting there biting your nails, or you're sweating because you got FOMO. That's when you're doing it wrong. I'd rather watch paint dry. It's not the cleanest consolidation either. We have multiple candles that are different ranges. So again, we're bouncing off the 50%. I'd like to see another immediate rebalance right here, an engulfing candle. The US 500 did pull down all the way to the 20 EMA, bouncing off Asia's first presented fair value gap since US 500 never created one. Another good sign would be as soon as we see a fair value gap created here on the 5M for US 500. As soon as this candle on the 1M closes above here, it's a good sign. $34. Remember, not just pushes above it. I want to see it close. Candle body close above this. That's the good sign that this thing is ready to push up. Otherwise, it could continue to consolidate for a little longer. At the same time, let's see if we get a 5M bullish fair value gap created here on US 500. That'll let me know these both are ready to push. Seven seconds. This is looking good. See, you gotta wait sometimes. It could just, there you go. There's your candle. Wait. There's your candle closure. Three minutes, 49 seconds left on the 5M. I want to see if we get a bullish confirmation here. And let's see if we get a 5M bullish fair value gap created here. So these are the targets still up here, DSD high, Asia high. That's where I'd like to see the market go into. Look at that huge wick that it just gave us. Remember, this is a bad sign that they want to consolidate or hold it here longer. Or drop it one more time to touch that 20 EMA. Just waiting it out. If we hit 11 o'clock and this consolidation has not broken, I'd exit the position. Remember, we're already in a safe trade. We've already rolled our stops, taken money off the table. If it was any other pattern, if it was an upside expansion, downside expansion, buy, sell, I'd be fine with it. I hate these inside the range models or contraction models. And then the opposite of the contraction model is the trumpet model. That's where Asia forms inside London, meaning London completely engulfs Asia. That's another one of those patterns where the market usually likes to sweep both sides. But they're annoying. They can cause patterns like this, consolidation. Because look how close that is. Look how close those targets are, right? So this could be consolidation, manipulation right into our take profit, and then distribution down to take out the bottom of London. Anytime you're using any of these as a target, the DSD high or the new week opening gap or the new day opening gap, if that is your absolute target, you exit the second it touches that box. You don't wait for it to get to the middle, the consequence encroachment. It doesn't have to hit the middle, it just needs to tap it. Looks like NAS is going for one last push down for that 20 EMA. Let's see where this next candle closes, if it touches this 20 EMA, if it just pushes down, or if it goes back up. So this was our double break retracement, immediate rebalance. All this gesticulation back and forth. Remember, the market translator helps you translate the market. Lets you know what the algorithm that controls the market is doing, or at least wants to do. This is where they're engineering new liquidity. That means there's people going short and people going long off of this area. That's the whole point of the consolidation. Consolidation leads people to go, okay, well, this is the support, this is the resistance, what are we bouncing off of? But those people don't really understand what's happening. There is no such thing as support and resistance. The market doesn't care about that. It knows you care about that, so it will psychologically use it to engineer new liquidity. Two minutes, 35 seconds left in this candle. We're now past 11 Eastern Standard. US 500 is still the stronger pair. It's having a tough time dropping past this zone. Remember, US 500 never broke down to the bottom either. So we had a double break without that break to the bottom. So the US 500 is the stronger pair. So I'm more interested to see how fast this goes and taps that zone, if it's heading in that direction. Still no confirmation on either of these, which is also a bad sign. You don't want to get confirmation late in the game, because we're supposed to be in a high probability trade setup 1 hour after the range formation. This is for the spotlight strategy. Spotlight range was formed, the dealing range was formed at 10:30. If you're not in the high probability trade setup by 11:30, you're done for the day. We don't even have a confirmation yet with 26 minutes left. That's another telltale sign that you're just going to get consolidation, or you're going to get consolidation for a long time before you get the push. You got to use all these methods to let you know. Remember, what's our first priority? It's capital preservation. So the second you see all of these things happening and you think, okay, well, I might not get a trade in my window of opportunity, or it might just consolidate all the way through, start protecting your position. You don't always have to wait till it hits 2R. Lucky for us, we already did. But if you hadn't, and you see a ridiculous amount of consolidation and you're in profit, start protecting your position. "25 minutes left in our stream. I'd like to see it get up there before we conclude. That's the funny thing about the market. It's psychology and reverse psychology put together. They know exactly down to the T how many candles need to be printed to drive you crazy, to push you out of your position. And then they push the market. Remember, the market makers know where all the positions are. You can figure it out too. So you use the fixed ranged volume profile right here. You can find it in here. All you do is take it from your dealing range low, touch the candle, to your dealing range high, and it's going to show you where a majority of these orders are, where the point of control is. So that's where majority of them are. The blues are buys, the yellows are sells. Look how many people went in for sells here. Again, that is the fixed range volume profile that I've saved. You can find it here on the fourth tab on the left on the toolbar. And all you do is just touch the candle low to the candle high of your dealing range, and it'll show you where all the buys and sells are. But with the red line here showing you where the point of control is. Point of control means that's where the highest orders are placed. Kind of makes sense that they're placed right there because remember, people use this as support and resistance. That's what they see when they see consolidation. They see support and resistance. So they see this as resistance, and then they jump in for a sell here. They saw this wick, and they jumped in for a sell. I would never take a sell in this market. We have a double break up here, and we have a triangle pattern here. Get rid of this. There's nothing about this market that I want to sell right now. We're at the 20 EMA. Looks like the market wants to desperately touch that before doing anything. So we've already violated this 5M fair value gap. I'm not using that anymore. There's your NYC gap. So we're back at the 20. US 500 never created that 5M bullish fair value gap either. So waiting and watching. But the market translator helps take some of those options off the table. As mentioned before, I am not looking for a sell setup here. We got into one buy down here. We've already rolled our stops. We've taken some off the table. This is my TP up here. And if the market turns back around and drops, right here, this white line, that's where my stop is. So if it crosses that, that's fine. We still made 2R. But there's nothing about this market. The only thing that would let me or make me think about a sell setup is if we had hit the DSD high and rejected that. Then I can see us falling in suit with the contraction model here to take out these lows right here. US 500 dropping all the way back down to the blue zone. Back into this fair value gap on the 1M. Three minutes left. We're still green on the 1, the 5, and the 15. This lets you know. For anybody who's new, this is supposed to be a visual representation of what the market is doing on higher time frames. This is telling you that the EMAs, where the 20 is over the 50, which is a bullish signal. So right now here, for example, on the 1M, we just changed to red. But on the 5, the 15, the 30, the 1 hour, we're green, and on the daily, we're green. The daily and the 4 hour are the ones you want to look at to see which way the market is going. It's just a visual representation that will immediately let you know, oh, this is a bullish market. So if you're a trend trader, you only want to trade in the trend, the direction of the trend, then you can just look up here and go, okay, well, on the daily, I'm bullish, and on the 4 hour, right now, on the 4 hour, we're bearish. So you want to proceed with caution, but you want both of these to be in the direction if you're a trend trader. So now remember that point of control that I showed you guys. I'm going to take it back. There it is. That red line is the point of control. That's where majority of orders are placed for a sell. I'll leave this as well, actually. "15 minutes left in our stream. 47 seconds left in this candle. Looks like we're getting an immediate rebalance off the 20 EMA, which is a good sign. So as soon as we take out these highs, everybody who went in short here just got their orders taken. Their stop losses hit. "19 seconds left. We ideally want to close with a engulfing candle. 13 seconds. If you're new to the market, you're about to find out how long 10 seconds and 15 seconds really is. You think it's just a short period of time. Not when you're watching money go up and money go down. Then 10 seconds is the longest time you've ever seen in your life. Get used to it. So we got an immediate rebalance off the 20 EMA. We're back at the NYC opening gap. US 500 never really dropped below Asia. Right there we had an immediate rebalance off this 1M. Do you see how the distance has now become the same? The distance from this candle to Asia high has now become the same as the distance from this candle, from this candle to the DSD high. It wasn't as much before when we were here. When we were here, this was the longer distance than from here to here. 14 minutes left in the stream. The power of 3 is a little hard to assess here, just because, as mentioned before, there's kind of ranging candles in this consolidation. So after that immediate rebalance, we get this. We just took out the low of that candle. Just a whole bunch of games being played right now. "13 minutes left. We had a few orange folders, but no high impact news drivers today. No red folders. That's the other reason you want to proceed with caution. Usually the market just keeps going back and forth, taking out liquidity, returning back to the end dog or the true day open. True day opens down here. There's your end dog. So for anybody who got in down here, this is that time. This is that gut check time. You can close out your position and profit, or you can let it ride, see if it hits that TP. Either way, this is giving you a sloppy market, and it's for the reasons I pointed out. No high impact news. You have yourself a contraction model inside the range model. That automatically shows you that it's going to be a back and forth day. I just thought it'd drop from here. This is where we would have liked to seen it hit and then drop to give you that back and forth. But this is getting muddy. We do not swim through muddy waters. So there's only about 10 minutes left in our stream. I just want to see this play out. We've already closed off our positions in profit. Now let's see if it would have gone back up there to hit that TP. Remember, that's your homework. Whatever position you took, come back later in the day and see if it actually ended up going in that direction or not. See what it was doing. Was there more liquidity that it needed to take? Was there an inefficiency you missed that it wanted to tap before pushing in the direction that you thought it was going to push? Or was it a complete and utter reversal? Remember, nothing is 100%. We're trying to give you the best and the highest probable setups. It's a game of probabilities. But as mentioned before, there's nothing in this market that makes me want to sell it. It's either a buy or nothing for me. Nine minutes left. Two more candles, and we'll conclude our session there. Let's see if we get any kind of push. Getting another push up from US 500. And NAS, let's see what this is giving us now. About 2 minutes, 47 seconds left still. One minute, 50 seconds left. .49 seconds. Again, just a bunch of back and forth. This could take forever to push. Let's see. After this, we're going to wait for one more candle to print on the 5M. We're going to conclude our session there. Back at that NYC first presented fair value gap. Remember, it's left no other fair value gaps here either. That was it. This is the only fair value gap that was created. 2 minutes 38 seconds left. Still consolidating, 1 minute 42 seconds left. Just took out these lows. Looks like it heading down to the end dog. So we'll conclude our session there. We've already exited our position. Again, this much consolidation on a day like this. Just proceed with caution. But your homework, come back later. See if the market actually dropped from here to take out these lows, or if it was just a deep retracement to the blue zone here and then a push back up. This is where the point of control is. This is where people went in short. Now keep in mind, this is showing you what retail traders are doing. These are the traders that usually get it wrong. But that'll be our session. We'll be live tomorrow. Please hit the subscribe button, turn on your notifications so you know when we're live. Check us out on fractaleffects.com where we teach high probability trading. And we'll see you guys tomorrow. Take care.